Hey, what's up, YouTube? Welcome to episode one of the Due Diligence Dude podcast. We're super excited to have you guys here. This is a project that I've been wanting to do for a long time. Since this is the first episode, we're going to do a quick little introduction of like what this is. Basically, what we want to do with this is bring on people, special guests that are in the investing, finance space, crypto space, really anything that we think will like bring value towards you guys. So we have an interesting first guest today, but first I just want to introduce like who is Due Diligence Dude. So my name is Raymond. I'm one half of Due Diligence Dude. My partner Dan, he's not here today, but he'll hopefully be on the next one. I guess without further ado, let's introduce our first guest. My good friend Noah Malik works as an investment banker at CIBC. So
Glad to be here, Due Diligence Dude, and nice to put a face to the DD name.
Yeah. It's I guess the first time you guys will be seeing my face. So that's awesome. Do we want to just start off, I guess, like introduce yourself, like what do you do, what got you into finance, and start from the beginning?
Yeah, I guess from day one. So I guess I'm in go to Laurier's, I'm in Laurier's finance program. And I guess
If
starting
people
off
aren't
as
familiar, sorry, like we might have some American viewers or whatnot. Laurier is a school in Ontario.
in Waterloo, Ontario. And I guess from the beginning, I always knew I was interested in business. And obviously, there's a lot of aspects to business you can get into, whether it's your accounting, your marketing, your finance, or your operations, or anything like that. And I guess the world is your playground, and that's really what you take your co-op experiences for, to understand really what you like and what you don't like. And for me, I guess as my first experience, in accounting, I realized, what, that's just not something that I really wanted to get into. And that just no specific reasons. Just something that I knew really wouldn't want to get into. So I guess here I was in second year. I felt like I was kind of a step behind those hardcore finance bros that know, like, right from day one they want to be bankers, or they want to be some PE guys on Wall Street or something like that.
Right.
But again, it takes time, and there's really so much to learn about this industry. And I've been lucky enough, I guess, to experience different co-op opportunities, one in private equity, like at a family office, and then the most recent at CIBC's investment banking team, on their diversified division. So again, I've had great experiences in both of those, and can speak to anything to that.
Yeah, I think something interesting would be like we might have some viewers that are like looking to get into finance, maybe younger people. Like when, like even like if you could possibly go back, like when you were applying to schools and whatnot, like did you always know that it was like a business program? You just like, because me personally as well, like I was always like interested in like the business space. So like what made you choose that in the first place?
Yeah, again, for me, I guess you always hear about the big Queens and Ivy names, and that's, I guess, you hear about those on a global level. And then
Right.
Laurier, I guess you don't hear about it as much. And I guess one of the reasons I was attracted to them was, again, they have a pretty good co-op program where, like, they have
Right.
a pretty large network. Whether you want to get into whatever areas of business, they have like a huge alumni base, and continuously growing in many different areas of business. And I think you can, like, especially if you don't have any connections, like, you really should be leveraging their co-op program, just to understand what you like and what you don't like, for sure.
Yeah, I think maybe one thing I guess we'll probably touch on that later when we were speaking before was about like the importance of networking in the finance industry. Like how important is it to like build relationships and that, like, one, to find your co-op position, and then once you found it, like find like future
Oh,
opportunities.
relationship building is honestly everything in finance, because, like, let's be honest here, like, you're applying to like an investment banking position, or really anything in finance.
Mhm.
Can't really speak to any of the other areas, but there's about 200-300 people behind you, and how are you going to differentiate yourself from the other people behind you, because they're easily just as qualified, and it's a matter of how are you going to stand out. Because like, the fact of the matter is, when you're especially a co-op student, or even as a first year analyst, your work is very replaceable, and someone right behind you
Right.
is willing to do, and they can equally do just as good work as you can. So it's a matter of how you're going to stand out, and how you're going to make a difference on your team, and just, again, just be memorable, right? So, like, when you're on your co-op terms, like, going for coffee chats or like talking to the managing directors or anything like that is so critical, just so they can put, a face to your name. And when it comes to the decision time, whether they want to hire you back or not, they'll be like, yeah, you know what, he does good work, but he's a guy that fits into the culture of the team, and that is probably the most important thing. So obviously it's tough in a remote environment, but got to make the best of it.
Yeah, that's actually an interesting question. Like, since I suppose your most recent job has been pretty much, I'm not sure, has it been like all online?
No, actually, like we were in person
Oh,
for
okay.
a couple months, and then same with the one.
Yeah. How do you
last
like, what do
month.
you do to help continue your relationship? But like, it must be difficult, especially like you have people different ages and stuff in the first place. But
Yeah,
being
I mean
online,
everyone's
like,
relatively young, but yeah, there's some old guys, and again, just asking, people, just going for coffee chats and continuously learning from these people is something that's so critical, because really when you're starting at the bottom, you know nothing. And like these people
right,
are like, they're going to teach you so much, and that's one aspect of it, but also like what's your value to them, and you have to bring something to the table, because when you're getting at the co-op level, like it's not just about you, it's what value are you going to bring to the team. And that's obviously what something that's very important when you're doing interviews and stuff like that.
yeah, for sure, for sure. I think an interesting question would be like, what, like you said that like when you went to accounting or whatnot, like it wasn't for you. But then you like now you found an investment banking position, which I feel like other people would be look like potentially and be like, oh, this might not be the most exciting thing. Like, what to you about it like makes it exciting? Like, what do you most enjoy about it?
I guess the part most enjoying is, yeah, you're very low down on the totem pole, but to me, what's most interesting is that you're working on transactions, or I guess anything that is very transformative to these businesses. So if you're working on the IPO, M&A,
You
or
want to just like
anything.
kind of backtrack quickly before you get going on that? Like what type of transactions do you work on and whatnot? Because people might not be familiar like with what an investment banker
I mean,
does.
so they go a wide range of different things you can
Mhm.
work on. Again, obviously you have, the glamorous, IPOs, and then the
Yeah,
$80 billion M&A deals, but that's the stuff that everyone sees. But there's
right.
a lot of background work that people really don't see, and that's, you do a lot of pitching, and pitching to businesses, different ideas, whether it's an acquisition, or I guess on the advisory side, in terms of capital allocation and things like that, um, is obviously very important. And really, I guess on the sell side, it's all about relationship building, and
Yeah,
really getting to know your clients, and what their needs are at specific times, and pitching them ideas. Because the thing is, I guess, how are you going to differentiate yourself from the other banks is really the main idea, and why, what my understanding is, relationships are really everything in the industry.
right. Like if I'm a company and I have a relationship with this bank, I would, those are the first people I'm going to call. Is that like that's the type of relationships you guys are trying to build?
Exactly. And let's say, you just want to have a good relationship. So let's say you do, a good job on their IPO. Maybe if they have like, a secondary offering or a future, acquisition they want to make down the road,
Right,
they liked you before, or what, they'll go back to you again for these
right,
other opportunities that have down the road. So,
right. It's
um,
definitely a business that I think like there's a lot of trust. So if you show them that you can do the right job, why would they go somewhere else, right?
exactly. And everything, you have to really pay attention to the detail,
Mhm.
which is, again, like you hear these stories of people, like making sure everything's centered to a T, and things like that. And yeah, and that's exactly what happens, because you have to make sure that everything is detailed. If you see one mistake in that, all of a sudden maybe your level of trust is not there, and maybe your credibility is out the window. So you have to make sure everything's picture perfect, because it's so easy for them just to go to another bank, or another boutique or
Right.
something like
Yeah.
that. So
Yeah. I feel like a lot of the narrative is with like entry level finance positions is that you just have this mountain of work and that, like you like the work that you're doing might not be that influential. But like from your perspective, it sounds like even if that might be the case where the work you're doing isn't like it's like not challenging you necessarily. I don't know if that's the right word, but like
oh
do
no,
you
there's definitely, like, sometimes you get some work and you're like, I don't even know how to start this thing. That's for sure.
yeah,
But again, a lot of like the work really varies, and it
yeah,
really is based on you, what you want to take, because like you can ask for all this work, and again, it's important not to get, especially when you're starting out, not to overwhelm yourself too much,
yeah,
because
for sure.
there's almost infinite amount of work you can take on. It's just a matter
Exactly.
of, you know what your capacity is at the time and what you're willing to take on. But I guess the key is willingness to learn is the
Yeah.
big thing, because really when you're at the bottom, you know
Yeah.
absolutely nothing,
Yeah.
and learning is everything.
Yeah, I think I mean, you're talking about your industry, but that can be applicable to
And that
literally
and yeah,
anything,
that
you know?
applies to everything, not just in finance,
Yeah.
accounting, literally anything.
Yeah.
So
And I feel like you might be also relate to this. You said like when you were working on your like accounting intern or your co-op, like you like because you're less passionate about it, it's like harder to want like motivate yourself and that kind of stuff. Do you feel that?
exactly, yeah, you have to find a passion, because again, money is not everything, right? You have to be intrinsically motivated. Like if you're not motivated, like you're not going to work hard, and that's the big
100%.
thing, right? So like that's how it goes. So again, this is something that really I'm interested in, and I'm willing to work hard. And everyone knows what the hours are like,
Yeah.
and no one really enjoys pulling all nighters. But again, like
But you
if
see
it's
like the
something you
bigger
enjoy,
picture, right?
and yeah, and you see the bigger picture, and yeah, and that's if that's the lifestyle you want, that you think you want to do and try out, then yeah,
Yeah. Do you feel like it's a very highly competitive type of job?
yeah, it's very competitive, because there's about 300 people behind you that would do anything to get the same position. So it's really a matter of like working hard and proving to them, yeah, they chose the right guy, and you're the right choice. And really, I guess when you're at these co-op positions, it's not they don't hire co-ops to for the sake of hiring a co-op or an extra body. It's
Right.
because they actually want to hire you full time. So that's kind of what I guess there's two aspects of it. It's the quality of work you do is obviously extremely important,
Of course.
but also it's whether you fit into the team, and do they want to go out for a rest? Like, can they go out for a restaurant with you? Like, do they like you? That's also another key part. So again, networking is huge in this industry.
Yeah. I think in any industry, like networking is so important. It's a skill that like it's kind of hard to build because like I feel like some people think networking you need to have like in genuine relationship and stuff. But I think it helps that because you're always talking to like-minded people who like enjoy what you're doing, like those are the type of people you'd want to hang out with anyways, right? Like
Oh,
when you
100%. And then again, like I guess in the early stages of the university, they have these network events. It's weird. It's definitely weird.
yeah, I know from
Um,
my experience, like I went to those too. Like it's like what do I say?
it's
Like
like,
why does this
yeah,
guy
it's what
want
do
to
you
talk to
say?
me?
Yeah, you kind of forget just how to talk. So no, but honestly, just like put yourself out there, and try to talk to these people, because you can learn so much from them.
Yeah, I think that's great advice. um I think would be like kind of interesting for our audience is you've mentioned like buy side and sell side. Like we have like a lot of retail investors who are probably listening. What do you mean by buy side and sell side? Do you want to just like explain what that means in like the finance world?
Yeah, so I guess on the sell side, which is kind of what the banking world is about, is the sell side, as it suggests in the name. You're selling something to a client, right? You're
Right.
selling, some sort of service or an advisory to them. So again, that could be like you're advising them on an acquisition they want to make, or maybe they want to spin off a part of their business, and they want to know how you would go about that, or could be like how they want to structure their business. Should they take out more debt to make an acquisition, or should they increase their dividend, things like that. So again, it's a lot of advisory, and again, it's a lot different than the buy side, I would say, on the contrary, because again, its sell side is very competitive, and you're trying to differentiate yourself from other banks or other investment banks who are competing again for maybe the same type of deal, as opposed to on the buy side. You're trying to, let's say you're in PE or you're doing equity research. It's not so much that you're trying to sell a service. You're just looking into making sound investments. And I guess obviously on the PE side, you want to make sure or get across the message that, yeah, this is a reputable fund, and a good fund that would buy a certain business, and that is very competent in running a business, and that's obviously something that's important. But again, it's the two sides are very different, and something that's good to get experience on both ends for sure.
Yeah, maybe you could talk about like having experience on both ends. Like I think we were talking earlier, you were saying like a lot of people they work for the buy side for, or sorry, the sell side for a couple of years so they can like understand how these type of transaction works, IPOs and whatnot. Then once they get to the buy side, they're like they're more informed on how things work, like underground kind of.
Yeah, I guess I mean, you have the classic route, the couple years of banking and then right to buy side. But again, maybe sell side is what you really like, and that's what you want to stay in. Again, but I guess you kind of find your way. Like I'm assuming once you're a couple years into it.
Yeah,
But like Bai said, there's so many different areas you can pursue. It's not just PE. It's also, I was also a part of Laurier's investment fund. So I did some small cap equity research for them. And again, one thing I guess I learned from that was with respect to equity research is you get ready to read because you are reading 10Ks
absolutely.
and quarterlies and earnings transcripts and you got to like in order to really, I guess, formulate an opinion about a company, you got to have a good understanding of what their history is and their track record in order to, even be credible to formulate some sort of opinion on forecasting or things like that. So, yeah, a lot of independent work on the equity research side of things, but yeah, some people like that. That's for
Yeah.
sure.
I've something interesting is like what were there any like particular projects? I don't know if you're like able to speak about like something you worked on, like a particular company you researched that like really interests you, or some sort of project that like you enjoyed.
Yeah, I mean, like there's a couple again, like I'm always searching for stocks and things like that.
Yeah.
So I guess one of the things I do like, so I guess back when I was doing some banking work was again, one of the classic tasks you'd be asked was like doing some of the analyst pages, which is just essentially like, what do reputable analysts think about this particular stock?
Mhm.
And what's their kind of census, you know, EBITDA or like their earnings on this thing and what are their price targets and how does that compare to the current stock price is something that's kind of very important. So again, I guess some of my free time is again just reading these sell side reports,
Yeah.
which I guess if they're mostly public information. If you have like if Laurier, I'm sure Queens or Western are the same thing. You go enter into their school database and these
Right.
are public. So yeah, that's one thing I guess I would do on my free time. But again, buy side research is a little bit more private, so you can't really look into that. But
Right. Do you like do like any individual research? Like when you're looking at a stock that you want to buy, like do you go through the same? Because I'm sure you've picked up like a ton of like useful skills like with equity research that you can obviously apply to your own portfolio.
yeah,
Um,
again, I guess when I'm looking at particular stocks or individual
mhm.
stocks, I guess one thing again,
Like you're more of a
nothing
long-term like fundamental
definitely
focus.
more of a fundamental guy. And I guess when you're looking at
Mhm.
fundamentals, one thing you look at is again the management team is I guess two things. The management team and how they allocate capital are things that are the most important things that you look at a business. Because again, if management is not competent, you're not going to invest in them. Like but that here's the thing. It's very difficult to gauge
Right. It's
how
subjective.
it's very subjective and it's very difficult because so when I was in Laurier's fund, one of the questions I got asked was, is the management team competent? And the question is, how do you answer that, right?
Right.
And and I guess the only really thing you can do is look at their track record,
Mhm.
and obviously, you can do your additional due that you can go on. Anyone can hop on their earnings calls. You can contact their investor relations page, and sometimes they may reach out and have an individual phone call with you. But again, it's something that's very difficult to gauge, but
Right.
honestly, extremely critical, right? Like, what are their track record of their acquisitions? Have they made good acquisitions? Um, how much do they have any debt? Because let's say a company has no debt. Why do they? So the company that I was looking at had no debt, right? So that kind of raises a red flag as to, why don't they have debt? Why are they not making acquisitions when they easily could, right?
Right. When they have
So
like credit, why aren't they using it? Like if
exactly, right? So when you
yeah.
see companies with no debt, it's kind of interesting. I'm sure there's some sort of reason that's into it. So I guess the company I was looking at was, yeah, they had no debt. So I asked, I just literally typed an email to the investor relations page and set up a phone call, which in most cases of small cap companies is possible. But if you're dealing with like, the
Oh, it's
big dog,
definitely possible with small cap
small
companies.
caps, yeah, you're
They
looking at
love
large caps,
talking. Yeah.
100%. Yeah, they'll definitely love to talk to you. Obviously, on the bigger guys, you're probably not going to be able to
Right.
do that. But yeah, and then I guess the reason is what they told me was it's a matter of fit, and they don't want to make an acquisition for the sake of just making an acquisition. They want to make sure that the fit is there, and they're going to have you know like pretty good synergies when they actually make this acquisition because they don't want to just make an acquisition just for the sake of it.
Yeah.
And
So when you hear that from the management, that's probably like, oh, that's probably a good move for management.
it's
They
a
have
good
like an
thing.
explanation for what, they're able to.
Yeah, but you want to have a reason to believe that there's progress being made, and they're going to allocate this capital appropriately.
Yeah.
Is something that's super important when you're looking at stocks like this. So again, it's important to do your own due diligence, as as the podcast suggests, because everyone's different, right? Everyone has different risk tolerances with what they like with respect to how much debt you may want to have on a company or things like that. So again, it's super important just to do your own DD is what we can stress over here.
Yeah. And another thing I think that for me, at least personally, like when I invest into a company and I've done a lot of research and I fully understand it, like if the price falls, like I'm way less concerned because I have a long-term mindset and I actually understand, the risks and opportunities that the company presents. So do you feel like that's something you benefit from, like just like improved conviction?
Exactly. Yeah. You just want to have again, if you have if you do the appropriate DD and you have a good conviction on it, then maybe what you are saying is the truth again. But again, the point is not to be too short-term oriented, because again, trying to predict fluctuations in the market on a day-by-day basis is extremely difficult to do.
Well, you have to have a trader's mindset for that, so it's obviously different.
Exactly. And I would consider myself more of a fundamentals guy, so I don't really shine on that regard. But again, you have to believe how have a high conviction, but again, it's do your due diligence. And that's probably the thing I can stress the most, I guess.
For sure. One thing I thought would be interesting is what's your future goal? Like you seem like you've been very successful. You've had a bunch of co-ops, like you completed a school, you have a business degree, investment banker. What's next? What's next for Noah?
Well, I mean, just want to get my feet off the ground for sure. At CIBC, and that's something that I'm really looking forward to, but it's really, really difficult to say, probably just going to stick with that for the time being. Because again, the last 4 months when I was there in the fall was some of the most enjoyable months I've had in a very long time. And again, being in office is just totally different than
you like
virtual world. And
you like being there, like around the team, and that I can definitely feel that
100%. And it's just a lot different, right? Because I guess if you're just sitting in a room all day plugging away, it could be a bit tough and it could get a bit dark sometimes. So just having human interaction is something that's big. And I guess in terms from what I've been told, like in terms of the months, like usually the winter is like kind of the darkest, because managing directors are trying to they start at $0, so they're trying to go hard, doing a lot of pitches to clients, things like that. But again, it's all in the investment banking world. It's always busy, and there's never a shortage of work. It's just a matter of how much you really want to take on, and how interested you are, and your drive to just learn as much as you can.
I think you've given a lot of super good insights, especially to our younger viewers. Like if you're interested in following this path, or any path, I think it's super important, as you were saying, to choose something that you enjoy. It might be in finance, it might not. But as you said, the best way to find out is to try it out for yourself. Take a co-op, take an internship, whatever you can.
And again, don't be afraid, even on LinkedIn or whatever, to reach out to whoever and ask for a coffee chat or anything like that, just so you can learn more, because again, you're not going to learn without trying. So that's the number one.
For sure. The worst thing that someone can say is no thank you, or ignore your message. And and you know what, you can think in that point, it's their loss,
Exactly. And when I was doing my equity research, I threw an email out to the person in charge of who, the investor relations contact, and I thought there was no chance that this guy is going to respond to me. And listen, even a $300 million market cap company, pretty big, I didn't think I was going to get a message back, and boom, they said, yeah, no problem, we'll set up a call with you. So I guess the bottom line is you never know until you try.
Right. You miss every shot you don't take. Right. Who said that? Wayne Gretzky, I think.
Yeah.
All right. So I think we're coming up on about half an hour. So maybe we'll just, do you want to quickly talk about that article we were discussing earlier?
So we saw an article, I guess, earlier, to summarize, which is basically an article explaining, maybe the energy transition that, we all know and hear about all the time is maybe not approaching as quickly as we thought it might be for a variety of reasons. And again, we know, like, fossil fuels, I guess from the point of view of the article, is, here to stay for the foreseeable future, specifically, again, in the developing countries where, again, you see China, not developing, but I guess in China, you see,
I would consider China a developing country.
No, they're not developing, but
some parts of China,
like you see, I think in Canada or the US, like we still use like 79% of our energy or something like that.
Right.
Is still fossil fuels. I think 86% in China, still in the high 70s in India. And the question is, how quick is this energy transition going to be?
Yeah. And I think that the point of the article was talking about like retirement funds. And obviously there's this whole movement going on about ESG and whatnot, which I think is like super important. Like me personally, like I think like ESG investing is like when actually done correctly, like when people are actually like investing to try and better the world and not just doing it for show. I feel like that's like kind of the future. But this person who wrote this article makes like an interesting point. Like, if it's our retirement fund, like, do we really care about ESG? Shouldn't you be caring about like our retirement?
Yeah, and it questions. So what are people's motives? Are people's motives,
Right.
to save? How big is this climate change an issue? And second to that, do people care more about their returns, or do they care more? Maybe they'll sacrifice a little bit, and they're willing to pay a little bit more so they can save the planet. So the question is, what are people's motives? And that's really the golden question.
After reading that article, what do you think? Obviously the author of the article seems to be pretty bullish on the energy sector as a whole, and his kind of like thesis is that this ESG transition stuff is like a little bit too much.
Basically the argument is that it's too much too soon, and again, it's tough to say that.
What do you think though? I'm interested.
What do I think? Well, I guess it's tough to say. Again, I kind of agree with it that maybe it's not happening as quickly as we think it might be, because again, in my opinion, fossil fuels will be here for quite the foreseeable future. It's not. I don't think it's going to zero anytime soon.
But even in that case, I think we discussed this earlier as well. Like, do you not think because of this whole ESG thing and whatnot, that publicly held like energy companies, like what type of like who's going to pay like for future earnings for a company that is going to have sanctions and all these environmental issues, like carbon offsets, whatnot, like
100%. And then that's the worry. I mean, there's no question in mind. There is definitely an energy transition that's going on.
Right.
And that no one's debating that. I mean, that's for sure happening. And it's a matter of here, the golden question, or the real question is, is there still, can people still profit on this, fossil fuels, and the reason for, pension funds or really anybody to invest in these companies, because if they can provide shareholder value and things like that, people will always and continue to invest in them until that is not the case. So
it's
that's
interesting
kind of the argument, right?
I feel like some of the market, definitely not all of the market, but there's a good portion of the market that seems, it's not like they don't care about returns, but they're unwilling to gain returns from something that they think is given like a negative externality. You know what I mean?
100%. There's definitely people out there that will do that, but there's also people who won't. So
it's really interesting perspective to have though. Like, I feel
definitely
like
interesting perspective, right? So, and I think what we're gonna have to look at to see is kind of like the primary market inflows to some of these. Like when when an oil and gas company wants to raise capital, we're gonna see look at the level of inflows that are coming into this company, and are they having more difficulty raising capital as opposed to 5-6 years ago is the question.
I think, what do you think about, like, there's obviously like a couple different alternative energy sources that are like coming out, including like batteries, but one of those is hydrogen fuel, that which you would assume that like oil companies like that wouldn't, it would obviously be a hard transition, but it seems like that's something they could do. Do you think that like do you think that the oil companies are doing enough to like,
tough to say. I mean, you see a lot of these,
you know what I mean?
You see a lot of these companies put like this trying to put this net zero goal or something like that by like 2030, 2040, things like that. So that's something that we're starting to see. But again, like it's in my opinion, it's going to take a little bit of time because it's not going to happen overnight. This thing, right? Like this whole energy transition is not going to happen
Of
overnight.
course not.
But no one really knows how long this is going to take, and
But when
it's
you
tough. Tough to
it-
say.
it's pretty hard at this point to say that it's not happening though.
Oh, it's definitely happening. It's just a
Right.
matter of when when really people are gonna
Yeah.
it's tough. It's just a matter of when it's going to be fully adopted, especially I guess in the developing countries, right? So
Yeah. I was definitely like interested reading the article to hear someone else's perspective. I'm personally still in the boat where I'm very bullish just on the clean energy sector as a whole. I think that
and
over the
yeah, and why
next
wouldn't
10,
you, right?
I mean,
Any normal person or any average person would
right.
love to have the clean energy, right? It's just a matter of is
Yeah,
that where you're going to get your best bang for your buck? That's
I
the
think
question.
part of the argument is also that even if clean energy does well, it's not like fossil fuels are going away so they can still make money. You know,
100%. Yeah,
yeah, like with inflation too, you look at the price of crude oil just soaring. Like, so
exactly. Yeah. So again, it's tough to gauge, but definitely an interesting topic to discuss much further.
yeah, there's tons that we could discuss. Unfortunately, I think we're almost at our time up here. Hopefully you guys enjoyed this. This is our first episode. Um, it was a little bit unorganized and whatnot, but hopefully you guys thought it flowed well. If anyone has any suggestions, questions, comments, anything, make sure to leave a comment on the YouTube video. Make sure to like, share with your friends. Do you want to say anything before we get going?
No, but just, happy to be on episode number 1 and keep the DD going.
Yeah, we're happy to have you, and hopefully we'll have you on in the future. We're really looking forward to having hopefully having weekly podcast episodes and getting more and more like interesting guests. Yeah, we have a lot planned. So thank you guys for watching, and we'll see you guys next time.